Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, January 28th, 2020. And what I'd like to do in this video is go over the components of the Nasdaq 100 that are scheduled to report this week. The Nasdaq 100, although it's not the most diversified index, it's concentrated very heavy, has a very top-heavy tech weighting. About almost half the stocks in there are tech stocks, and that is the market. It's also the largest, technology is the largest sector in the S&P 500 at nearly a quarter of the weighting there. And so to do this, we can go through these stocks. I'll go through some of the charts, pretty quickly, kind of breeze through some of these. And the reason I like to do this video, and I did it last week, is because it's been my experience that more often than not, if a stock has a clearly bullish or a clearly bearish technical posture heading into earnings, that is likely the direction the stock's going to go afterwards. In other words, the next trend. Now, I need to say this, and it bears repeating. I say it often. As a swing trader, it is an aggressive strategy to hold a stock going into earnings, especially to take a stock just before earnings. Now, you can do that if you're an aggressive trader, if you're managing risk in your portfolio by diversifying, not concentrating too much into one position or one sector. No problem, again, if that meshes with your trading style, to take what I call an earnings play, where you're pretty much gambling. Any trade you make is essentially a gamble if you're taking a risk. But you have a little bit higher risk when you do earnings plays, because whereas normally in a regular a swing trade, any time that 3 months between earnings reports, the odds for a big gap against your position are pretty low. Depends on, and here's the other part to this, guys. Know your company, know the stocks that you trade. I think that's key to investing. When I used to be a financial advisor, they had a rule, I forget, it was FINRA rule, or first it was SEC, then FINRA. It was called the Know Your Customer rule, whereas by industry regulations, I had to know my customer's background, risk tolerance, where their money was invested before I could make a recommendation. You couldn't walk in and have a sit down and I couldn't blindly recommend an aggressive tech fund or a conservative bond fund or anything in between without knowing, okay, what else do you have? I'm not going to recommend Apple or a technology stock or investment if you have a concentrated portfolio, 90% of your money in tech. So that's the know your customer rule that financial advisors have to abide by. And in trading, I have my own rule. I call it know your stock rule. Know the security that you're trading, because they are all not equal. And so when it comes to earnings, some companies have a very volatile business model, and they're more prone to gaps due to that. Let's just take Intel, for example. They reported the other day and it had a big gap up. Now, this was one that I thought post-earnings would probably go to the downside, and it didn't. See, here's a good example. It went to the upside, and it was a pretty big gap. And if you look at Intel, I'm not certain each of these are quarterly earnings, but you go back, and they probably are. You can see a lot of big gaps, and I know a lot of these, like this one, I believe, was earnings induced. That's a very, very big gap. And just like then, that could have went either way. So here's an example of a stock. There are two factors: how volatile the company's earnings are, and that's going to change industry to industry. You trade a utility stock, you're not going to have a lot of volatility in earnings, because people pay their power bill. Whether the economy is good or poor, they're going to keep paying their electric bill. That's the last thing they're usually going to cut out. And so you have smoother earnings there, less surprises. So you just have to know your company, and some do a better job of managing expectations or not. And so therefore, if you're trading a company like this that's prone to gaps, factor that in. Go back on the chart, look back a couple years and say, okay, well, let's say, over the last few years, what was the biggest gap? There's about a 9% opening gap to the downside. Would I be okay with that? If I had X amount, whether it's 5,000 or 50,000, whatever your number is in Intel when they went into earnings, and let's say you were long, would you be okay? Would that not devastate your portfolio to have a 9% gap against you? And if it is, then simply either don't hold this company going into earnings, or take a small enough position that you allow for, let's just say, a 10% gap for or against your position. So, all right, let's dive into the charts here. And we'll start with QQQ, and again, I'm going to go through the components that are reporting this week. What I have is a watch list here sorted by earnings report dates. So as we go through these, you can see right here, can freeze the video if you want. These are all today, January 28th, right here. Most of these, if not all, are after the bell. A lot of tech companies tend to report after the bell. Financials like to report before the bell. Remember, on the site, right side of the chart.com, on the top menu under Resources, click Resources. That takes you to the right side of the chart support center. Down on the bottom right, I use it almost every day. It's called Tools of the Trade. A little box down there. It has a link to earnings, an earnings web page site where you type in the symbol, or it'll show the calendar who's reporting this week today. And it's very important to know which of your trades, whether current positions or trades you're considering taking. Be aware, especially during the earnings season. For the last few weeks and going forward for the next month or so, you're going to have a flurry of earnings reports coming out. So, all right, so we're going to go through these, and I will talk quick, and I'm going to breeze over some of them because, as you see, we go all the way down here to this one, IDEX, right there, and that's how many we have to cover this week. And I can tell you right now, that tells me that's 26 stocks. Again, I'm not going to spend a lot of time on each and every one. Let's go back to QQQ and look at what's probably the most important line on this chart right here. Is this uptrend line. We gapped down below yesterday, so that is a sell signal. I told you this morning I'm looking for a near-term bounce, and I probably should have added to that post as well. I made one comment. I added to it that, hey, if we get that bounce up to those bounce targets I'm looking at, that would be an objective shorting area if, quote unquote, if you are an aggressive investor. There's nothing wrong, or trader. There's nothing wrong with waiting to see how these earnings start to come out. We had Intel, and Intel's the sixth largest, and obviously they went to the upside. But the big ones that have a much heavier weighting are coming out this week. Apple, number one today. Let's see where Apple goes. And Apple's not the whole market, but it may start to set the tone. And like I've said, common theme here is the charts to me were clearly bearish, still are. And if, I already shared my opinion, I think this is, this earnings season will be, and it's already starting to be, the catalyst for that long overdue correction. And again, what I think yesterday was, as much as anything, is just nervousness in those people that are long, in institutions that are long, those market leading FANG stocks starting to take some profits out of the tech sector and things like that. So from a technical perspective, we gapped down below the trend line support yesterday, and we're below it. So again, any bounce trade right now, I'm viewing as, kind of viewing as picking up nickels in front of a steamroller, because I do think there's more downside. And so if you're not an active trader, you might not want to try to game a 1.5%, whatever it is, bounce to the upside. You may want to just start scaling in short now. And bottom line, I wouldn't go aggressively short until at least a few of the FANGs are out of the way, because I may be completely wrong. Like I said, the trend is bullish. There's no mistaking that. The trend is bullish. These are just technical postures, and we do have some recent sell signals. So therefore, it's increased my convictions that we're probably going to get, a decent drop here. Decent meaning 5, maybe another 10% downside, possibly more. We'll see. And if I'm wrong, maybe these will prove to be, or they will prove to be, whipsaw signals, false breakdowns, and we could continue to thrust up, and the divergences will remain intact at least for the foreseeable future. One thing I'm going to do before I move on to the individual stocks is pull this line down and give what I like to call a benefit of the doubt trend line. There's a candle right there, and if I hit the bottom of that candle, I bring the trend line down here. This is not a valid trend line, at least not to me. I like to see 3 distinct reactions on a trend line to help validate it. As I like to say, any 2 points, such as this one and this one, can be connected at random. It's that third reaction off a trend line that helps validate it. This to me is the better fit, the one that I had. So that's why I'm viewing this as a breakdown. I have a lot more reactions on that trend line. And as you can see here, you have, several here, one right there, close enough, one right there, and again, depends how I want to drag it and play around with this. So right now, that's what I'm going off of. Okay, let's dive into the charts, and we'll start out with the leader here, the largest publicly traded company in the world, like at least here in the U.S. I don't know if the Saudi Aramco counts as that. It's not trading on in the Nasdaq 100 or anything. So we have Apple, $1.4 trillion company, and that is a clean breakdown. That is a sell signal. You have to take it with a little bit of a grain of salt because the earnings are coming out today after the bell, and that has the potential to foil this breakdown and pop us back up here. Again, we had numerous breakdowns both Friday and yesterday, so these are sell signals, and although there is that risk that they could prove to be whipsaw signals because of earnings. If you take them on face value, which I'm doing now, that does put the market on a sell signal, and as well as Apple. So there it is, and I already went over that. It's already broken down. Bearish technical posture, although the trend is bullish, and so therefore, despite what happens immediately after they report today, even what happens early on tomorrow, I favor more downside on this stock in the coming days to weeks, and based on this technical posture of Apple, here's a trend line. Let's just look at the weekly chart. I think it's going to come and visit this trend line. I can't rule out another thrust up, but I don't favor it. I don't favor a new high. I favor at least a pullback to this trend line on this weekly chart. So primary trend line, that's about, depending on when it gets there, about 8%. I've already shared targets on Apple recently. You can see here I have 60-minute targets as well, and this is the area I'm favoring, about the 279 level. And again, try to realize if that happens, that would be closer to about a 10-11% drop there. That's going to certainly have an impact on the market. Okay, I'm going to move a little faster through the rest of these. As I go down the line, remember Apple that I just talked on is a $1.4 trillion company. The Nasdaq 100, the S&P 500, they're market cap weighted indexes. They give a higher weighting to the larger companies. So next up here is Starbucks, which is a $110 billion company. That's a big company, but it's a tenth of what Apple is, and of course the weighting is not going to have nearly the impact. Where does this stock go? Well, this is the most salient level right now. Probably should color that yellow. I didn't do that to each and every one of these. There's your primary uptrend line. You can see it comes off the mid 2018 lows, and that we closed pretty much on it, as well as we have some pretty decent price support there, about 87.30, and based on the technical posture of this, I'm going to say crapshoot, 50-50. I wouldn't bet this one because A, it's on trendline support. You don't have the divergence like a lot of these other ones, so it could have another pop up before it breaks down. But keep in mind where the majority of these companies report, or at least where the market trades these stocks after, it's going to impact the rest. And what I mean by that, if Apple were to really disappoint and go down and drop that 10-11% I'm talking about to my target over the next couple of weeks or whatever, couple of months, it's probably going to drag down Starbucks and others with it due to forced selling, because it brings the index down, and money flows out of QQQ and all the Nasdaq 100 related ETFs and mutual funds will spill over into forced selling into Starbucks, most likely. So there it is. And look, whether we get another pop-up or not, what I can tell you is this is a key support level. So a solid break, especially a solid close below that uptrend line, as well as that 87.31 level, give it the benefit of the doubt. If you want to set one number, and I'll do it right now, set a price alert for to go below 87.30, and you get that, and that's a sell signal on Starbucks. And forget about the T1, T2. Some of these are old annotations I have on this chart. Your first decent support comes in here about 82, then 75, and then 69. Those are potential targets for that. Okay, I had to pause the video there for a quick phone call. And I'm going to pick it up here. Starbucks I just covered, like I said, go either way. The market is just open now, so we're going to see these trading. When I had started the video, the market was closed. Go back to Apple, just show you. There it is, little kickback rally today. It's expected in the market and Apple so far. And I'm going to fly through the rest of these and get this video out to you guys. AMD, there's an example right there. Let me tighten this line up a little bit right here and here. What I'm trying to do is catch that starting candle, catch these, and I'm going to pull it down there. And so what you have there is a successful defense of support. You had an intraday breach, and we're back above trend on AMD. Now this to me is a clearly bearish technical posture, but a bullish trend. And with that, this can go either way. And what I can say definitively is a sell signal comes on a solid break below this and or close. So we'll see after AMD reports. But when you're in a wedge like this, even though it's a bearish, bullish trend with a bearish technical posture, you can certainly come up another thrust within the wedge before breaking down. So, the safe play, again, the common theme of this, the safe bet is to wait and see how these things, a lot of these companies start to report, at least before taking an aggressive short position. If you're a bull and you want to go long, you can, but I think a lot like I said, this little counter trend bounce I'm trading, long since off the lows yesterday is what I view as picking up nickels in front of a steamroller. As far as a trend, a longer term trend investor, trend trader, going long, buying long at this point in the rally, this point in an extended uptrend with divergences, I think is also picking up nickels in front of a steamroller, but just to a larger scale. In other words, you can get one more thrust up here. I think that would be about it before a breakdown. 48's a big level on AMD, so there's your sell signals if and when AMD. And again, I'm doing these because these all report today actually on AMD. eBay. What I can tell you, I don't have a strong opinion on this one. Bullish above break above the trend line would be a buy signal, of course. You have a downtrend line right there, and that could provide an objective long entry. And just above that, 3650 is resistance. So really, I wouldn't hold off. I would hold off if you were considering going long until 3650 is taken out. You can see that's a clear trading range right there. You get in these little trading ranges, and it was a little whipsaw there, but then boom, big gap down. That was probably earnings, and then it's set up in this tight little range here. So the way I see eBay, near term, you can flip a coin. Bullish if that level's taken out, bearish if not. So those are your levels to watch on eBay. PCAR, divergent high, and it's been correcting since. This one looks to me, before all is said and done, even if it has a kickback rally, you have a little resistance here about 79. That would be an objective level to short if it pops up there after earnings, but eventually I favor a move down here to about that 72.50 level. It's in a downtrend, what I call near-term downtrend, in a longer-term uptrend, and I think this level will be hit before all is said and done. Xilinx had a bullish falling wedge there, breakout. You can see this one trades well to the technicals. Just take a quick glance at all these divergences, trend lines. Here is a divergent high, rising wedge, boom, big breakdown. That probably came on earnings. Look at the gap down, the big candle. And see, that's the point of this video, is sometimes you have to get ahead of these stocks. I like to sometimes take a calculated risk and start shorting in advance on earnings. If you have these type of stocks that tend to do this, you're in an uptrend and then boom. Why? Because what happens, it's not objective. This thing, I don't know if it opened here or here or somewhere between, but it's not objective to short it there. You missed almost the whole thing. So had you said, look, here's a clearly bearish chart pattern, I'm going to establish a short position, even if it's a starter short, you were profitable there. You could have added on a bounce, and then you had support here, and once support broke, your little triangle, it kept going down. And so it just trades very well to these trend lines. You can see roll back here is another trend line. A little minor trend line, big red candle, there's your objective short entry. Look at the drop from there. If you shorted that trend line breakdown, the stock didn't stop falling until it had dropped about 30%. And then it came full circle. Watch, rinse, repeat. You had a bullish falling wedge pattern, clean downtrend line, positive divergences down below, breakout with big green candle right there, breakout, follow through green candle, and from that point it rallied up to the 103 level, about 12%, and then recently it hit resistance at 103 and had this little wedge pattern. It broke down and it's at support right now. We'll keep that there, about 97.50. So this one's already broken down, had divergence recently. This one I favor more downside as I do on most of these semis. So common theme here: tech, the FANGs, and the semiconductor sector, which is really the canary in the coal mine for the tech sector. A lot of bearish looking charts. Maxim, another semiconductor, negative divergence at resistance there about the 6360 level. That is, let's show you here. 1, 2, that was a failed breakout above that level, and then followed by a downtrend line break, and boom, powerful leg down. That was probably earnings, who knows, maybe just a technical drop breakout there. So we're again at resistance, potential triple top pattern there, and you can see some support levels below with a primary, initial swing target of this blue uptrend line right there. Microsoft, that's going to report tomorrow after the close, and broke down yesterday, but it's snapping back to the trend line right now. And again, just another example of how you can have increased whipsaw signals. Now, it hasn't recovered the trend line yet. This is a back test. If they weren't reporting tomorrow, this is a stock that I might add as an official trade, because we broke down and now you have the back test, and I expect Microsoft will do this. However, you have earnings tomorrow, and anything is possible. It could gap back above, it could gap way down. It is objective here, but again, you just run the higher risk because they report tomorrow that you could get caught on the wrong side, or the right side of a gap. So, just take it. Just be aware of that if you decide to take that. And I think the safer bet, guys, right now, with the FANGs reporting, why pick one of them? Why run the risk that you pick the one FANG stock that happens to go up, gap up sharply, and all the other 4 drop, and if you're shorting, or if you're going long, works in reverse. So if you trade QQQ, because you have such a concentration of those FANG stocks, you're spreading your bet. You're really shorting Apple, Facebook, Microsoft, Alphabet, all those companies, and your risk of a huge gap, if any one company blows the cover off the ball or really drops, is much lower because of that diversification. So right now, I think if you're going to trade through this earnings season, that's probably a better way to go, is stick with the index ETFs and wait till some of these individual names are out of the way, and then we'll see. If Microsoft happens to gap down here, we'll look for the next objective entry, and I'll update it. But I think this one's coming down to that 140, 176 and uptrend line level right there. I'll have to revisit that trend line. Yeah, let's not put too much into that trend line now. Let's just look at 141.76 level, and that would be about a 13.5% drop in Microsoft if it gets there. Negative divergences, everything else tells me that'll probably be the case coming up in the next few months here. Facebook, breakdown there. We had a trend line here. We broke down. We back tested it right here, and then recently broke down. Again, they're going to report tomorrow as well after the bell. So Microsoft and Facebook. You have PayPal. PayPal is walking up the trend line. No divergence, but we have overbought conditions, and the PPO looks like it's poised to cross over, make a bearish cross. Break of this trend line triggers a sell signal on PayPal. And I might have to move this up there, right there. There's your first target, about 108.28. Tesla, rising wedge now, very overbought, and if it breaks that, it will probably come in and check this trend line once again, and that is, depending on if and when it gets there, about 20%. So a lot of meat on the bone on Tesla. And again, if the FANGs break down, they're going to take Tesla down with it, is my thoughts. Mondelez, right, little wedge pattern. It may want to work its way up, but you can see the divergence. So it's a matter of time whether we get another thrust up or not. A break of this trend line triggers a sell signal that takes this stock down to the 51.50 level, and that would be from where we're at now. That's a drop of about 6%. ADP, automatic data processing. There's your trend line. A potential target right there, about 164.85. That is negative divergence, overbought conditions. So yes, just definitely a bearish technical posture, still in an uptrend. And again, your sell signal would come on a break below that level. And I need to give you one other level here. I think 170, that 172-ish level is pretty significant support right there as well. So you want to see that go, and that would open the door to a move down to either of these two levels here, probably ultimately down here to about 157. ILMN, Illumina, no opinion on that one, so we'll move on. Lam Research, another semi, walking right on this trend line, a break of this trend line, big negative divergence. Break of that trend line takes us down to the next trend line. That's your first target. And then, let me fix this a little bit up there, about 242 would be your next target after that, if that goes. And of course, that would trigger a sell signal if and when that trend line breaks. Align Tech, support right there, 263.64. It's flirting with that level now, and pretty thin down below, so that could trigger a drop all the way back down here to about that 219-ish level, we'll call it. If that breaks, divergent high says it probably will. It's already started to roll off the divergent high. Last time we put in a negative divergence and broke a trend line support here. Well, let's just say from the top, from the divergent high down to the lows, that stock fell about 49%. Amazon's tough right now on the daily. It's not screaming, it's not really bullish or bearish. It's kind of neutral to me. I don't have a strong opinion on this one. I wish I had a better read on it. Weekly chart, pretty darn bearish. You know, this is a primary uptrend line here that was broken, back tested. We've rolled over, back tested the primary trend line a couple times, right there and there, rolled over, but we've been setting up in this kind of trading most of the last year and a half, almost 2 years, in this trading range here. We had that during the meltdown in late 2018 there. We went down through there, but this is a big level, so about 1682, and there's your resistance up about 2043. Because of the divergence, everything else, trend indicator still bullish for now. But all I can say is unless we get that, it's hard to say which way this one goes. Bullish if we can break above the top of the range, bearish below. But you're in a trading range, so I don't like shorting stocks inside a trading range. Let's see what happens after earnings, and then maybe we'll have some more visibility on where Amazon goes. Amgen, I don't have a very strong opinion there. VRTX, Vertex Pharmaceuticals, price channel right there, maybe a overshoot of the channel. We need to extend the divergences. I haven't updated this chart, and so a break of the channel would trigger a sell signal, and you have some horizontal support right there, right about there, and that would be your first target. BIBB, really no opinion. I don't have a strong opinion on this one. Support right there, resistance right there, the downtrend line. If it pops that, the next target or resistance up here about 365 or 370 or so. XEL, Excel Energy, don't have much of an opinion on that. Let's give you a trend line right there to watch. Divergent high, it's not yet confirmed, but break of this wedge right here, this rising wedge, would certainly trigger a sell signal. I'd have to work on this chart a little bit more to give you some additional levels, but I'd say take you down to this larger uptrend line there. EA, Electronic Arts, don't have a very strong opinion on that one, so we'll move on. ALXN, Alexion Pharmaceuticals, not a big, I don't have much of an opinion on that one either. So again, I don't like to force opinions. I'm going over the stocks that to me have a clearly bullish or bearish technical, well, not many bullish. At best we have some, indeterminable patterns. But and again, when the trend is bullish, you give the trend the benefit of the doubt. If I see a stock in the pattern and I don't see a clearly bullish or bearish pattern, you have to give the benefit of the doubt to the current trend. So you want to maybe hold off on shorting any of those. WDC, Western Digital. Yeah, I'm just not seeing a lot there. I do see a little bit of divergent high, so that's certainly bearish, and I certainly think this will go down because it's a tech stock. If the Nasdaq goes the way I think it will here in the next few weeks, this one's probably coming down. I'm a little adverse to giving you price targets because I don't see any well-defined levels on that one. CHTR, Charter Communications, there it is, pretty clear. This is a bearish chart to me. This is a longer-term trend line that comes in here. Let's go to edit that trend line, extend it to the left. It's already extended to the left. Let's color it up a little bit, and you can see there's a longer-term trend line that comes into play No, that's odd. I don't know why I had that, so I don't need to extend that to the left. Let's turn that off. Edit, extend that to the left. Nope. Take that off. Let's see if we can pick up a trend line here. Yeah, that comes in pretty good. So there's your primary trend line there. So this is just a sort of a wedge type pattern. We'll move this divergence line over here, overbought. But most important, probably the single most important level here is this minor uptrend line. That would trigger a break and a sell signal down to, we need to give you one more level there. Somewhere in that area would be your first target, about 407, and then the uptrend line that I just showed you there. IDX Laboratories, it's really, divergences, pretty steep divergences there. As I often say, those are not sell signals. Sell signal comes on a break of support, and on this one, there's your trend line right there. Some support right there as well. And a lot of potential downside on this one if and when that breaks, I think. So here's a potential swing target somewhere around right there. And that's it, guys. That's through this week. So I just covered every one of the stocks that are reporting this week in the Nasdaq 100. This one will report next week, and as you can see, clearly bearish pattern, but we still have a sell signal pending. Alphabet needs to break that. So I'll cover these, later this week, either Friday or early next week. I'll do the same thing for the stocks that are bound to report. And but remember, we're going to have 4 out of the 5 FANG stocks reporting this week. Alphabet's the last one. That's a holdout. It reports February 3rd, next week. And so I think the market's going to have chosen a direction by then. So, all right, we'll wrap it up here. I'll get this out to you. And I want to do an update on the cannabis stocks as well today. I had a question on those yesterday, so I'll try to follow up with some charts on those trades for you. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.